Joining us now is Stacey Sears, portfolio manager over at Emerald Advisors. Stacey, what have we learned this week? Welcome.
Welcome. Thank you. Thank you so much for having me. I appreciate it. Well, I think that we learned that the market is handling a lot of this news in pretty good stead. I think the S&P is on track for it to be slightly positive this week. The Russell 2000, which has been the most inversely correlated to surges in 10-year Treasury yield, is on pace to be flat. So I would say net, the market is navigating kind of the volatility of the week in a pretty good place.
I thought this line from Michael Hartnett was interesting over at B of A. He says he thinks that the hot CPI earlier this week is a blessing in disguise because it means that Trump's going to have to go small and not big on tariffs and maybe on immigration as well.
I think that's certainly an interesting perspective. We're not really concerned about the level of inflation as we sit here today. I know that we've seen an uptick. I think some of the PPI elements are indicating that the transmission to PCE, which is the indicator that Powell is most focused on, is not quite as significant. It looks to be running up right in that 2.5%. And if you remember, when the Fed reset the expectations in the summary of economic projections for 2025, we did see those inflation expectations for core PCE move slightly higher, and they're sitting right in that kind of 2.5 to 2.7 range. So we're pretty comfortable that the Fed is in the right place. We don't believe inflation is running away. And if you take a look at kind of the long run inflation expectations inside of the recently released New York Fed Consumer Expectations Index, the 1 and the 3 year are firmly pinned at that 3% level.
No, that's a great point, because it was right after that kind of worrisome number the Friday before from Michigan. So I'm just kind of looking through, Stacey, your notes. So how are you positioning? You just kind of talk us through, is it, we were just saying we're just near all-time highs in the stock market. There's been tech didn't do as well in January, but I don't know if you have to worry about that or if you just kind of stay broadly exposed. What's your strategy?
Yeah, I think, look, as we sit here today on the small cap side, we're seeing a lot of encouraging data points coming out of the early stages of earnings. We're only 30% through the cycle. We trail that of the S&P within the Russell 2000. But I think what's encouraging from our perspective is that earnings growth is coming in ahead of expectations. If you recall, small caps have essentially been in an earnings recession over the better part of the last 2 years. The fourth quarter was the first quarter that we were expecting that earnings to turn positive year over year, and we're outpacing those expectations. So I think the earnings assumptions were for about 2% growth. We're tracking at high single digits. And I think what is also encouraging about that is the breadth of the outperformance. We're seeing really nice upside within the financial area, within healthcare, within technology. Revision ratios are turning positive. And typically for small caps, we start the year with higher expectations and they get tamped down as the year progresses. And the fact that we're seeing those hold in, I think, is a very encouraging sign for a recovery in the asset class that has lagged for the better part of the last 3 years.
I was going to say, they're dead to me. The small caps are. I took them out. I took them out of the retirement portfolio. I'm done. And I feel like it's not a forever thing. It's kind of high inflation, high rates. You go, I don't know. Why do I need this?
Look, I think if you look at the small cap universe as a percentage of the overall equity universe, we are at trough levels. If you look at concentration in the mega caps, peak levels. There has to be a reconciliation. We don't believe that there are structural changes to the underlying index. What has been lagging for small is earnings, and we're starting to see that recover. The domestic economy continues to stay strong. Atlanta Fed GDP is tracking to 2.9%. For small caps to historically do well from an earnings perspective, you look at something around 2.5%. So we're trending better than that. And some of those headwinds to earnings, we believe, are starting to abate. If you look at borrowing costs, they are actually coming down. I know that's been a headwind to flows, but you are seeing that if you look at the secure overnight financing rate. That's come down about 100 basis points. So we're definitely seeing some opportunity inside of small. Those pressures are abating, and we think that's going to lead to better earnings growth, which should lead to better performance given where valuations sit today.